Welcome to all of you, Shiksha 360. And today we will start our next chapter, basically, that is chapter number 22, that is components of ALM. Clear? Basically, can anyone tell basically what is the full form of ALM? Basically, as basically we have discussed in detail, this is ALM basically stands for the asset liability management. Clear? ALM basically stands for the asset liability management. Clear? Basically, in the previous chapter, basically we have also discussed in detail regarding the asset liability management. So let's start our discussion. Basically, what are assets? Basically, what are liabilities? Clear? Basically, in this session, basically we have basically just discussed basically what are the assets and what are the liabilities of any financial institution or the bank. Clear? So let's start. So basically, assets and liabilities. Clear? Assets and liabilities has today become the most typically subject of any financial institution. Clear? Assets and liabilities basically has today become the most typical subject of any financial institution. Clear? It encompasses the analysis and development of goals and it encompasses the analysis and development of goal and objectives. Clear? So basically it encompasses basically the analysis and development of goals and objectives, the development of long-term strategic plans. Clear? The development of long-term strategic plans, the periodic profit plans, and the rate sensitivity management. Clear? So what it encompasses and what is our main objectives? Basically it encompasses the analysis and development of goals and objectives, the development of long-term strategic plans. Clear? The development of long-term strategic plans, periodic profit plans, and rate sensitivity management. Clear? And rate sensitivity management. Clear? So in one way or another, clear? Basically in one way or of another, it has always been the function or the responsibility of treasury. Clear? Basically in one way or another, basically it has always been the function of, clear? In one way or another, basically it has always been the function or the responsibility of treasury and other financial or strategic departments. Clear? So in one way or another, basically it has always been the function or responsibility of treasury and other financial or strategic departments. Clear? And other financial or strategic departments, basically to what? Basically to manage the asset liability management. Clear? To manage the assets and liabilities. Clear? Basically, however, of late asset liability management departments are being established. Clear? Basically earlier, as there are no specific departments. Clear? Basically earlier, as there are no specific departments basically for the asset liability management. Clear? Basically for the asset liability management. Clear? So basically, as however, of late, asset liability management departments are being established, and asset and liabilities committees are being formed within financial institutions. Clear? And asset and liabilities committees basically are being formed within the financial institutions. Clear? So these committees, clear? Basically, what they will do, basically, these committees are often, clear? These committees are often given extraordinary powers. Clear? These committees are often given extraordinary powers regarding the mix and match of assets and liabilities. Clear? So these committees, clear? Basically these committees are often given extraordinary powers. Clear? These committees are often given extraordinary powers regarding the mix and match of assets and liabilities. Clear? Regarding what? Basically regarding the mix and match of assets and liabilities, and have large influence. Clear? Basically and have large influence in binding up activities basically which do not fit business strategies. Clear? Basically what are the main these objectives of these committees? Basically they have given extraordinary powers. Clear? Basically they have extraordinary powers regarding the mix. Clear? Regarding the mix and matchup of the assets. Clear? Like I think all of you are aware regarding the basically merging of the banks. Clear? Basically after the merging of the banks, basically many branches of the banks are shut down or closed down. Clear? And many basically offices are also shut down. Clear? So basically that function is also done by the asset liability management department. Clear? Basically as per the requirement or as per the need. Clear? So basically these committees, clear? Basically these committees are often given extraordinary powers regarding the mix and match of assets and liabilities. Clear? Regarding the mix and match of assets and liabilities, and have large influence. Clear? Basically and have large influence in binding up activities basically which do not fix business strategy. Clear? which do not fit in the business strategies. So basically they will wind up that activities. So now what, let's here discuss basically what are the components of a balance sheet. Clear? So now basically we have to discuss what are the components of a balance sheet. Clear? So can anyone tell basically what are the different components of a balance sheet? So please tell fast if anyone know basically what are the different components of a balance sheet. Clear? So basically balance sheet, as we have already know, basically balance sheet basically comprises of two components. Clear? Basically it comprises of two components. First one is the source of funds. Clear? Basically from where we will get the fund, that is source of funds. And second one, where basically we will utilize these funds. Clear? Where we will utilize these funds, that is application of funds. Clear? So basically components of a bank's balance sheet, basically there are two components. First one is the source of funds, second one is the application of funds. Clear? So now let's discuss basically from what are the source of funds are. Basically first one is the capital, second one is the reserves, third one is the deposits, fourth one is the borrowings, fifth one is the other liability and provisions. So these are the some sources of funds. Clear? So now basically what are the application of funds? Clear? Basically where are they utilized? Basically application of funds: cash in hand and balance with RB, second one is balances with the banks, clear? Third one here basically investment, fourth one is advances, which we consider it also as a loans, fifth one is fixed assets, sixth one is other assets. Clear? So basically all these are the application of funds. Clear? So basically here we will discuss basically what are the components of a balance sheet, source of fund and the application of funds. Clear? So let's discuss in detail one by one. Clear? So let's discuss in detail one by one regarding all these things. Clear? So now let's discuss basically components of the liabilities. Clear? Components of the liabilities. Clear? So basically what are the main liabilities? Clear? First one is the capital. So basically capital, basically what it represents. Clear? So capital represents the owner's stake. Clear? So capital represents basically what it represents. Basically capital represents the owner's stakes in the bank. Clear? So what it represents? Basically it represents the owner's stake in the bank, and it serves as a caution for depositors and creditors to fall back in the case of losses. Clear? Basically if they will lose their money, clear, so they will fall back on the capital. Clear? And it serves as a caution, basically we can say that as a protection factor for depositors and creditors. Clear? Creditors are basically also like similar to the depositors. Clear? Basically who give money to the bank, that are basically known as creditors. Clear? So and it serves as a caution for depositors and creditors to fall back in the case of losses. Clear? Basically to fall back in the case of losses, and it is considered to be as a long-term source of funds. Clear? It is considered to be a long-term source of funds. Clear? So what is the minimum capital required? Clear? So minimum capital requirement basically for the domestic and foreign banks. Clear? What is the minimum capital requirement? So minimum capital requirement basically for the domestic and foreign banks, it is prescribed by the Reserve Bank of India. Clear? Basically that capital it is to be prescribed by the Reserve Bank of India. So next one is basically reserves and surpluses. Clear? Reserve and surpluses. Clear? The components under this item. Clear? Basically the components under this item basically it includes statutory reserves, capital reserves, share premium, revenue and other reserves, and balance in the profit and loss account. Clear? So basically what we have to include under the reserve and surplus, basically the components under this item. Clear? So what are the components? Basically the components under this item, basically it includes statutory reserves, capital reserves, share premium, revenue and other reserves, and balance in the profit and loss account. Clear? Basically, and what is basically and balance in the profit and loss account? Basically all these things are basically covered under the reserve and surplus. Clear? So once again, I will discuss basically what reserve and surplus. Basically, first one is basically under reserve. Basically, what we have to cover: statutory reserve, capital reserve, and share premium, and other reserves and balances. Clear? And other reserves and balances basically in what? Basically in the profit and loss account. Clear? In the profit and loss account. Clear? Next one is the deposits. Clear? Next one is the deposits. Clear? So main source of funds for the banks is the deposits. Clear? Basically main source of funds for the banks, it is basically what is basically it is a deposits. Clear? So basically the deposits are broadly classified. The deposits are broadly classified as deposits payable on demand. Clear? Basically there are two types basically deposits. One is basically demand deposits and other one is the term deposits. Clear? So basically the deposits are broadly classified as deposits payable on demand, which includes current deposits. Clear? Basically which deposits are basically known as demand deposits? Basically like current deposits, it means that basically balances the current account, overdue deposits, call deposits, etc. Okay? Basically second category is the saving bank deposits, and lastly the term deposits. Okay? Basically the term deposit, basically what is term deposit? Basically that is which are payable, which are repayable after a specified period. Clear? Basically the term deposit basically are those deposits which are repayable after a specified period. Clear? Basically which are repayable after a specified period, and that is basically known as the fixed deposits. Clear? And that deposits are basically known as the fixed deposits, short deposits, or the recurring deposits. Clear? And that deposits are basically known as either they are known as fixed deposits, short deposits, and the recurring deposits. Clear? It depends upon case to case. Clear? Which deposits are basically they are known as. Clear? So second category is saving bank deposits, and last category is basically the term deposits which are repayable. Clear? Basically which are repayable after a specified period. Clear? Basically which are repayable after a specified period, known as fixed deposits, short deposits, or recurring deposits. So next one is borrowings. Clear? Next one is the borrowings. Clear? These are also one of the liabilities. So borrowings in India. Clear? Borrowings in India basically consist of borrowings or refinance obtained from the RBI. Clear? So borrowings, basically borrowings in India basically consist of borrowings or refinance basically obtained from the RBI, other commercial banks, and other institutions and agencies. Clear? Other commercial banks and other institutions and agencies like IDBI, Exim Bank of India, NABARD, etc. Clear? So basically what is borrowing? Basically borrowings in India consist of borrowings or refinance. Clear? Basically consist of borrowings or refinance basically obtained from the RBI, other commercial banks, and other institutions and agencies. Clear? And other institutions and agencies like IDBI, Exim Bank of India, NABARD, etc. Clear? Basically that all are to be included under the borrowings. So what are the other liabilities and provisions? Clear? Other liabilities and provisions. So the other liabilities of the banks are grouped into the following categories. Clear? So other liabilities and provisions, the other liabilities of the banks are basically grouped into the following categories. What are these categories? First one is the bill payable. Second one is the inter-office adjustment. Third one is the interest accrued. Fourth one, others. Clear? So let's discuss one by one. First is bills payable. So basically what it includes, basically this includes drafts, telegraphic transfer, traveler's checks, mail transfer payables, pay slips, banker checks, and other miscellaneous items. Clear? Presently, basically all these items are not in use. Clear? That is basically all these items are not in use that much. Clear? So basically what bills payable, what it includes, basically this includes drafts, telegraphic transfers, traveler's checks, mail transfer payable, pay slips, banker checks, and other miscellaneous items. Clear? And other miscellaneous items. Next one is inter-office adjustment. Clear? Next term which we have to discuss here is to be basically that is inter-office adjustment. Clear? So the credit balance of the net inter-office adjustment. Clear? That is basically comes under the inter-office adjustment. Basically the credit balance. Clear? Basically the credit balance in the net inter-office adjustment. Clear? In the net inter-office adjustment. Third one is the interest accrued, clear, interest accrued. So the interest accrued but not due on deposits and borrowings, clear, that are also comes under the other liabilities and provisions, clear. Basically interest accrued, clear, the interest accrued but not due on deposits and borrowings, clear. Basically we have calculated the interest, but that interest basically we have to pay after a specific period of time, clear, we can say that, clear. So that is basically known as the interest accrued, clear. So the interest accrued, basically the interest accrued but not due on deposits and borrowings, clear. Next one is the others, basically what we have to come under the other. So other, all other liability items, clear, all other liability items like provision for income tax, TDS, interest tax provisions, etc. Clear. So what we have to discuss under the others, basically all other liability items like provision for income tax, tax deducted at source, interest tax, provisions, etc. Clear. Basically all these things come under the others. Clear. So all other liability items like provision for income tax, tax deducted at source, interest tax, provisions, etc. Clear. So all these things basically comes under the other liabilities and provisions, clear, other liabilities and provisions. So next one which we have to discuss, clear, basically here we will discuss all the components of the liabilities, clear. Basically in this, in the previous two slides, basically we have discussed all the components of the liabilities. So basically what are the, first one is the capital, second one which we have to discuss here is to be reserve and surplus, third one is basically we have to discuss the deposits, clear. Basically deposits, under that deposits, under that basically what we have discussed, under that basically we have discussed the current deposits, saving deposits and the term deposits, and after that basically we have discussed the borrowings, clear, what are the borrowings, and in the last basically we have discussed the other liabilities and provision, that is bills payable, inter-office adjustments, interest accrued and the others, clear. So I request all of you, please revise these things, clear, please revise these things. Like yesterday we have conducted a quiz in the BFM group regarding the basically chapter number 13, that is operational risk, clear. Basically all these things, basically what we have asked in the quiz, basically all these things basically have mentioned in your slides, clear. All these things are mentioned in your slides, but most of the answers are basically wrong, clear. In that basically many of the answers are wrong, clear. Like basically I will discuss one thing here, like we have discussed one question that is basically in the group regarding the basically advanced management approach, clear. Basically based on operational, clear. So basically that thing basically I have later provided the slide also in the group, clear. So I request all of you, please go through these things, clear, because these questions are directly straightforward questions for your exam, clear, straightforward question for your exam. So please revise, clear, please revise all these things. So let's move to the other thing, that is components of assets, clear. Next basically next thing which we have to discuss here is to be components of assets. So what are the assets basically which we have discussed already in the second slide? First one is cash and balances with the RBI, clear, cash and balances with the RBI, clear. So all cash assets of the bank, clear, all cash assets of the banks are listed under this account, clear. Basically all cash assets of the bank basically are listed under this account, and it forms the most liquid account held by any bank, clear. Cash and balances with the RBI, clear. So basically all cash assets of the bank are listed under this account basically, and it forms the, clear, and it forms the most liquid account basically held by any bank, clear, and it forms the most liquid account held by any bank. So what are the cash assets? Basically what is to be included, the cash assets consist of the following. First one is the cash in hand, clear. First one which we have to discuss here is cash in hand. So this asset item basically it includes cash in hand. What cash basically it includes foreign currency notes and cash balances in the overseas branches of the bank, clear. So basically what we have to include under the cash in hand, clear. Basically what we have to include under the cash in hand, basically this asset includes, or this asset item basically includes cash in hand including foreign currency notes, clear. Basically cash in hand including foreign currency notes and cash balances, clear, and cash balances basically in the overseas branches of the bank, clear, and cash balances basically in the overseas branches of the bank. Next one is basically balances with the RBI, clear, balances with the RBI, clear. So cash account, clear. Basically cash account also includes the balances, clear. Cash accounts basically also includes the balances held by each bank. Clear? Cash account basically also includes the balances basically held by each bank with the RBI. Clear? Held by each bank with the RBI in order to meet statutory cash reserve requirements. Clear? So cash account basically also includes the balances held by each bank. Clear? Cash account basically also includes the balances held by each bank with the RBI in order to meet. Clear? Basically in order to meet statutory cash reserve requirements. Clear? In order to meet basically statutory cash reserve requirements. Next one here is to be discussed basically balances with banks and money at call or short money notice. Clear? As we have already discussed basically call money, short notice money. Clear? So basically balances with banks and money at call and short notice. Clear? So the bank balances include the clear. This is also included under the bank balances. Clear? So the bank balances basically include the amount held by the bank. Clear? Basically it includes the amount basically held by the bank in the current account and term deposits. Clear? Clear? Basically the bank balances basically it includes the amount held by the bank. Clear? Basically it includes the amount held by the banks in the current account and term deposit account. Clear? Basically in the current account and the term deposit accounts with other banks. Clear? With other banks. Clear? So money at call and short notice. Clear? Money at call and short notice includes all loans. Clear? Money at call and short notice basically it includes all loans made in the interbank call money market. Clear? Basically made in the interbank call money market basically that are repayable basically within 15 days notice. Clear? Money at call and short notice basically it includes all the loans. Clear? It includes all the loans basically made in the interbank call money market. Clear? Made in the interbank call money market that are repayable basically within 15 days notice. Clear? Basically we have know that basically call money basically overnight and notice money basically for 14 days. Clear? 2 to 14 days. Clear? So basically that are also included basically one of the components. Clear? Of the assets. So next one which we have to discuss here is to be a major asset item in the balance sheet of a bank is investment. Clear? So a major asset item in the balance sheet of the bank, it is basically investment, and investment basically where it in various kinds of securities. Clear? Investment it is basically where in various kinds of securities. Clear? What it includes basically these includes government securities, approved securities, shares, debentures and bonds, subsidiaries or joint ventures and other investments. Clear? So what we have to include under that. Clear? So a major asset item basically in the balance sheet of a bank is investment in various kinds of securities, and basically these includes government securities, approved securities, shares, debentures and bonds, subsidiaries or joint ventures and other investments. Clear? Subsidiaries or joint ventures or other investments. Clear? Basically all these things comes under the assets. Clear? Cash in hand, balances with the RBI, balances with banks and money at call and short notice. And next one is basically the investments. Clear? Investments. So next basically we have to discuss regarding the advances. Clear? Basically that are also one of the assets. So basically under that basically we have discussed first one is the most important of the asset items on the bank's balance sheet are advances. Clear? The most important of the asset items on the bank balance sheet are basically its advances. Clear? So basically these advances which represent the credit extended by the bank. Clear? Basically this in technical language basically these advances basically what it represents basically these advances basically represents the credit extended by the banks to its customers. Clear? Basically that this represent basically these advances which represents the credit extended by the banks basically to its customers forms a major part of the assets for all the banks. Clear? Basically what it forms basically it forms a major part of the assets. Clear? Basically it forms a major part of the assets for all the banks. Clear? So what how they will. Clear? First one is cash credits, overdrafts and loan payable on demand. Second one is loans. Third one is bill purchased and discounted. Clear? Third one basically which we have to discuss here is to be bill purchased and discounted. So first one is cash credit, overdraft and loans repayable on demand. Clear? So what are the items under this category? Clear? Basically items under this category basically represent advance. Clear? So items represented or under this category basically represent advance which are repayable on demand. Clear? Basically, either they are repayable on demand, so maybe have a specific due date. Clear? So maybe have a specific due date. Clear? So basically, they have also a specific due date. Clear? That is basically repayable on demand, but they have a specific due date that basically up to this much date you have to repay your money back. Clear? So basically, I think one here we have missed regarding the this one is term loan. Clear? Not loan. Basically, this one is term loan. Clear? Basically, all term loans. Clear? Basically, all term loans are extended by the bank are included here. Clear? Under this. Clear? So basically these advances. Clear? Basically these advances also have a specific due date. Clear? Basically also have a specific due date. Basically like they are working on the EMI. Clear? Monthly installments. Clear? But they will not become payable on demand. Clear? Basically these advances also have a specific due date. Clear? These advances basically also have a specific due date, but they will not become payable on demand. Clear? But they will not become payable on demand. Clear? That are basically comes under the term loan. Clear? That are basically comes under the term loan. Next one here is to be basically bill purchased and discounted. Clear? Next one which we have to discuss here is to be basically bill purchased and discounted. Clear? So basically this item includes what it includes. Basically this item includes the bill purchased or discounted by banks. Clear? So what it includes, basically this item includes a bill discounted or purchased by banks basically from the client. Clear? This item includes a bill discounted or purchased by banks basically from the client, irrespective of whether they are clean, documentary, or domestic foreign. Clear? So basically what we have to include under the bill purchased and discounted, basically this item includes the bills. Clear? So this item basically includes the bills discounted or purchased by banks. Clear? This item includes the bills discounted or purchased by banks basically from the client. Clear? From the client, irrespective of whether they are clean, documentary, or domestic foreign. Clear? Irrespective of whether. Clear? Irrespective of whether they are clean, documentary, or domestic or foreign. Clear? Irrespective of whether they are clean, documentary, or domestic foreign. Clear? Basically that are comes under the bill purchased and discounted. Clear? Basically that are comes under the bill purchased and discounted. Clear? So basically all these are category of the advances. First one is the cash credit, overdraft, and loans repayable on demand. Second one is the term loan, and third one is basically the bill purchased and discounted. Clear? And third one basically which we have to discuss here is to be bill purchased and discounted. Clear? So basically in this session we have to cover up to this much point. In the next session basically we will cover what are the basically the bank's profit and loss account. Clear? Basically bank's profit and loss account, basically what are the income, what are the expenses. Clear? Basically we have to discuss all these things in the next session. Clear? Basically that are very, very important. And next one important thing, clear, basically which we have to cover in that also, basically what is the net interest income. Clear? Net interest income and net interest margin. Clear? Net interest income and net interest margin. Clear? And definitely you will get basically 2 to 3 mark paper exam from this chapter. Clear? Basically directly straightforward questions. Clear? Basically what we have to include under the components of assets, what we have to include under the components of liabilities. Clear? Basically they will ask these types of question in your examination. Clear? Basically these types of question in your examination. Clear? Which we will discuss also in your Telegram group. Clear? So thanks to all of you for attending this session. Hope what we have discussed today is clear to all of you. Basically this is theoretical topics, but you have important topics for your examination point of view. Clear? But they are very, very important for your examination point of view. Clear? So thanks to all of you for watching this session.